if people start jumping out of their towers of paper and grabbing real assets which have intrinsic value, all this money printing by the central banks over 40 years can become visible in a very, very short period of time. And you could have inflation, you could have prices of real assets like cocoa and sugar and copper and everything else. It can start to double in a few weeks as the trend accelerates of capital seeking haven from the inflationary collapse of the debasement of the currency by the central banks.
Hey friends, Sean from SGT Report here. Thank you so much for tuning back in. We really appreciate it. That was my friend and researcher. He's also a mining executive, David Jensen, and he's going to lay out the brass tacks facts about the endless money printing coming from your criminal federal government. The end is now in sight. In fact, the end of our dollar cannot be stopped. It won't be stopped, and neither will the debasement of your currency's purchasing power. I think you're going to find this to be a master's class in precious metals manipulation and the truth about the dollar. Thanks so much for tuning in. Before we start, just a quick word about our sponsor. Guys, gold has been on an epic, nearly unstoppable run. It's happening. Central banks are ditching the dollar and U.S. treasuries and buying more gold. The good news? It's predicted that gold will go up a lot more. UBS has even predicted a $5,000 per ounce gold price. And Noble Gold Investments' phone has been ringing nonstop. Everybody wants to protect their retirement with gold, and you can do the same. Now, it should be said that there are no investment guarantees. Do your own due diligence. But Noble Gold Investments can help you secure gold to protect your future. From the first day you call Noble Gold Investments, you'll work with a dedicated all-American expert. So whether you're a beginner or an experienced investor, Noble Gold Investments will make sure you get all the help you need. But that's not all. This month, Noble Gold Investments will give you a free 1/4 ounce gold standard coin if you open a qualified account. So go to noblegoldinvestments.com right now. That's noblegoldinvestments.com, or call them directly at 877-646-5347. You'll be glad you did. Hey friends, welcome back. Thank you so very, very much for tuning in. It's Sean from SGT Report with a very, very important broadcast. This one all about precious metals and the fact that gold and silver are units of measure. And my guest, my esteemed guest, David Jensen, who is a mining executive and has a heck of a Substack page, he says the war right now is against units of fair measure. That's where we stand in human history, guys. And I just want to remind you all of this picture. That's Evelyn de Rothschild, who was in charge of the Rothschild gold fix until 2004, when the Rothschilds exited the gold fix after more than 100 years, pointing his finger squarely in the chest of Prince Charles at the time, now King Charles. It's widely believed that the Rothschilds are the money masters and the real power behind the scenes, the power behind the throne. It was the original Rothschild who said, "I care not who makes a nation's laws as long as I control the nation's currency." And Rothschild controls the currency. My guest, David Jensen, is back. How are you, David?
I'm well, Sean. Good to be with you again.
Good to be with you, sir. I want to remind the audience that a couple years ago, you wrote this article, "The Bank of England Gold Price Rig Now Leads to Global Collapse." And it was but 2 weeks after that Evelyn de Rothschild passed away. I mean, you're kind of right over the target. Where do you want to begin today? With silver, by the way, back down to 26.56. I will play a clip in just 1 second from a CFTC troll that will explain why silver can't pierce $30 an ounce. But where would you like to begin today, my friend? You've got a heck of a new article out. Let me just tell people the title of it. Chinese banks flee London's daily gold and silver auction. Then suddenly global bullion banks appear at Shanghai Gold Exchange seeking, quote, cooperation. Ooh, somebody's panicked. Is it the big banks, David?
Yeah, I think it's the metal traders. But I think the best place to start, back to your original question, Sean, is let's look at the 1970s when money printing from the money printers got out of control. And during this after August 1971, when the U.S. defaulted on gold redeemability for U.S. dollars. Over the next 9 years, gold went up by 24 times, gold went up by 21 times, and silver went up by 24 times. Inflation went to 9% and interest rates went to 19%. And what they learned over that time is if you want to run loose monetary policy, you've basically got to shut off the warning system, because gold and silver became a safe haven, a lifeboat for people that were trying to preserve their wealth from and not use the certificates of confiscation, which is what they called bonds then, and I would argue that they are the same now, or into the stock market, which really suffered as interest rates rose. So it appears what they did was that they basically shot the canary. And the way they did that was in 1986, the Thatcher government had what was called the Big Bang financial reform legislation. And what they did in that legislation was they gave oversight of the London gold and silver markets, which are roughly 90% of the day's global gold and silver trade. They gave oversight of the London gold and silver markets to the Bank of England, who are the money printers. So it's a heck of a thing when those who have oversight over you, you're given control of them, and that's essentially what happened when the Bank of England was given oversight of these metals markets. The Bank of England and the LBMA, they formed the LBMA, the London Bullion Market Association, in 1987. And they are all situated in the city of London, which is the square mile there within the greater London city. And basically what happened after that date was that they started to trade these promissory notes for gold and silver. You did not need to have gold or silver sequestered or set aside for a spot contract, which is the cash contract that they trade there on the daily basis. You just needed a promissory note. And so what they did was that essentially back in 1987, gold and silver were converted from real assets into virtual assets. And virtual assets, which were basically promissory notes or promises to deliver if they were asked to deliver. But you can create promises and you can trade promises without limit. And that's what appears to have happened. So since 1987, the S&P 500 has gone up 20 times. Interest rates have gone to zero for the last 10 years until 2022. And gold is 3 times the 1980 high, and silver is half of the 1980 high price.
Yeah.
So you can see how much these real assets, these units of fair measure, have suffered while these financial bubbles were spun, and the basically the financial sector of the economy basically gorged itself on the wealth of our society.
Let me ask you one thing about those mountains of paper that have been issued, essentially promissory notes, you might say, but the derivatives market, the billions and billions and billions of fake ounces of silver and gold that are thrown at the market to tamp down the price. I'll play a soundbite about that in just one second. Peter Schiff is a big gold guy. One thing that really rubs me about Peter Schiff is that even when gold goes down in a day, when it's attacked and it's down $50, he calls it profit taking. He never, ever speaks to the manipulation of these metals that I think you just aptly spoke about, because silver is at half its all-time high, which is preposterous. Do you want to talk a little bit about that? Because it's not just the gold fix anymore in London, which the Rothschilds stepped away from in 2004. You write in this article, the daily gold fix continued at Rothschild's premises, but without Rothschild official participation until 2015, when a new twice-a-day London Bullion Market Association, LBMA, gold price auction was begun with a broader array of market participants. I think it's hilarious that in this day and age, they fix the gold price through a conversation in London. It's preposterous. Yeah. Do you want to talk about the manipulation and the mountains and mountains and mountains of paper?
Yeah, well, I mean, they continued using the Rothschild offices and their phones until 2015, and then this new I guess they didn't like the gold fix or the silver fix, because that's really what it was. And they went over to this daily gold price auction and silver price auction with, I think there's like 15 authorized direct participants in it for gold and less for silver. But ultimately what they're doing is they're bidding on a promissory note. They're not bidding on ownership of any particular bar. So what you have is a digital price for a digital contract, and the fiat price that you're seeing is really a digital unit, and you're bidding for a digital promissory note. So it's nothing. So the problem though occurs with these markets, as we saw in 2016 with the palladium market, when shortage occurs. Because when shortage occurs, these banks who are selling hundreds of millions of ounces, billion ounces or more of silver in the global markets every day, and hundreds of millions of ounces of gold in the global market every day, when they try to sell these spot contracts in particular, which are immediate ownership contracts. So you immediately have the right to a gold or silver bar. And then, London's policy is they try to have what they call local London delivery within 3 days. So you request a bar, you're supposed to have delivery within 3 days. And what we saw with palladium was that basically the bullion banks disappeared from that market. They could no longer drill the price in the palladium market when the price took off, and it was like a 5x move in about a 2-year period. But they couldn't sell their spot contracts into the market because people would then belly up to the bar and say, well, here's the contract. We want delivery of bars. We needed to keep our auto plant going. We need the palladium for the catalytic converters to keep the car lines going. So that is the Achilles heel of these fraudulent markets, is as long as people are running around holding your contracts like they're magic beans and believing in them, everything's fine. But when you have a shortage and you sell your magic beans into the market, or your spot contract promissory notes into the market, people get a hold of it. They say, okay, we'll take the metal, and then you have a default. So the wild volume, the wild trading volume only works to contain the price. You could sell the price. You can flood the market with gold and silver, air quotes, flood it with supply, drive the price down, take out the trading stops, kill the price for a period of time, force everybody to cover. It only works while there's ample metal in the market. So I think what we're seeing here in China is a signal that there's serious trouble in the gold and silver market globally. And maybe that's our entree to discuss the whole aspect of the Chinese.
Yeah. So the near silent departure of Chinese banks from participation in the City of London's gold and silver price auction is contrasted with the sudden appearance in 2024 of large global bullion banks suddenly visiting the Shanghai Gold Exchange offices, each seeking, according to SGE published news releases, cooperation in China's gold and silver markets. The SFE, the Shanghai Futures Exchange, has made no announcements about such visits to its offices, although they may also have occurred. During April 2024, there has been an initial spike to approximately a 7 times increase in daily trading volume of silver on the SFE. Now, I want you to comment on that in just 1 second, but I want to remind people, when silver was on a tear just recently, it was ready. It wanted to pierce $30 an ounce. And most chartists were saying if it does that, well, it could go to 35, 40. Maybe we'd actually see that all-time high again. But here's what they do. This is Russell Benham over at the CFTC talking about how they can tamp down the price using the futures market to control this very volatile asset that must be controlled at all costs. Listen to this.
And in many respects, the resiliency and the market structure of the futures market really were able to tamp down what could have been a much worse situation in the silver market.
A much worse situation in the silver market for the banks. Let's be very clear. It's not a terrible situation for those of us who want an honest unit of measure, who want real money. These suicidal bankers are just that, aren't they, David? They're suicidal bankers, and I hope that they drown in their own flood of paper.
Yeah, well, they're running what they are is they're experts on fiat money bubbles, debt bubbles, and that's their profession, is blowing these bubbles. And if you want to blow those bubbles, you've got to shut off the warning systems, which are gold and silver. And this is why it's so interesting with the Chinese banks. You began discussing that, and They joined the London bullion market. I think if you scroll up, it should note that they joined back, and it started joining after 2015.
Mhm.
And the four major Chinese banks joined the LBMA daily gold price auction and silver auction. And each time one of these Chinese, and we're talking about ICBC and Chinese Industrial Bank, I mean the big ones, they would join, and the LBMA would make an announcement. And this information, by the way, comes from Ronan Manley of Bullion Star. And there's a link in my article there about what he found. But each time that there was a joining of the daily price auction as a direct bidder, each the by the major Chinese banks, there was a news release sent out by the LBMA, and then they were trumpeting this. And then what Ronan has found is that these banks have all disappeared from the London daily price auction. They're no longer listed there, and the LBMA was not updating the list of participants in a timely fashion. Not only did they not note it, but they delayed a long time any adjusting of their daily lists of direct participants. So number one, you have to ask why these major Chinese banks join, and then why they decide to all depart at once. And then secondly, when you compare it to the Shanghai Gold Exchange, where you have to deposit a bar in order to issue a gold or silver spot contract, immediate ownership contract. You've got to bring a bar to the Shanghai Gold Exchange or the Shanghai Futures Exchange. It's got to go through an approved refinery, and it's got to get serialized, a serial number printed on it with a laser etcher to identify the bar. And if the bar is withdrawn from their vaults, you've got to go through the same refining process, and you've got to get a new serial number in order to trade that. So you've got these Chinese exchanges are kryptonite to the Western exchanges, because you've actually got to have the metal. And so what you're scrolling down here is that you're showing here these pictures from the Shanghai Gold Exchange, and what they're doing is they're trolling the Western banks. What they're doing is they are highlighting that each of these banks has come here in 2024, in the last couple of months, to Shanghai. They have come there and they've been seeking cooperation in the gold and silver markets. So China enters the biggest gold and silver market in the West, which is London. They stay for a few years. They depart. They don't want any part in the auctions. And then now we see each of these bullion bank, the paper gold and really paper bullion banks, if you want to call them that. But these paper bullion guys start showing up in China looking for cooperation. So it's extremely interesting to see this turnabout all of us. At the same time that we've seen just south of $100 premium in gold, and well over $5 premium in silver on the prices that are listing at the Shanghai Futures Exchange and the Shanghai Gold Exchange. So they're running very substantial premia, which are not fully extinguished. And when you look at the cost, like to fly a 747 freighter with 3 million ounces on it, you're running about like 10, 15, 20 cents an ounce just for the flight cost. So if you call it a buck and a half or $2 with security and insurance to move gold and silver from New York or London to Shanghai, that should extinguish the price premium, and it's not. The price premium has been shooting up in the last 3-4 months, especially just as these Western banks are arriving in China, seeking cooperation. Like the Chinese market is telling us something, that there's much more demand for this metal, and it may even be that these are the Western banks securing silver, because that's the one thing you're allowed to export from China freely and openly. You can export the silver from Shanghai and cover your short positions in New York and London. We don't know.
Yeah.
That's opaque, but the bullion banks are very short gold, silver. We know on the COMEX that they've got a net short of about 160 million ounces was the bullion bank net short in the paper markets there. And if you look at their total short position, it's over 300 million ounces. We have no idea how much metal they've borrowed from the ETFs and the other silver holders in New York and London. And we have no idea what their short position is in London, which is the major market, the major Western market for trading gold and silver. So lots of unknown things. But what we're seeing here is that the Chinese appear to be trolling the West, showing pictures of their paper traders, their paper metal traders coming to China. And the fact that they've departed the major gold market in London is really interesting.
Guys, apologies for this real quick break. In a word about our sponsor. If you suffer from daily pain, please listen to this message carefully. What we know about pain relief is changing forever, and that's where pioneering medical scientist Clint Winters comes in. You may have seen this world-renowned health expert featured in the national media as he's unveiled a natural pain reliever that's taking the world by storm. I'm talking about canalidine, the 100% drug-free way to get full-body pain relief without dangerous pills. It's become the go-to pain reliever for over 1 million Americans and hundreds of professional athletes. Canalidine is the only compound on Earth that optimizes your body's natural painkillers, called endorphins, at any age. And the best news? Canalidine has no documented side effects after 14 years of extensive testing. So just make sure you click the link below this video and check out Clint's amazingly informative report on how canalidine is changing lives by providing safe and powerful relief at 1/10 the cost of pain pills. When you click on the link below today, you can access the only canalidine product in the world for less than $1 a day. Go to trycano.com/SGT right now and see for yourself. The link is below.
And the fact that they've departed the major gold market in London is really interesting.
Yeah, let's go back to those pictures. So JP Morgan Chase, Standard Chartered, HSBC. I see what you mean by trolling, right? Because I don't think these banks necessarily want the word out that they're
Right.
hungry for silver, that they have to go to China and beg for cooperation. So let's talk about cooperation. China will not export a single ounce of gold, but they are allowed to export silver. So the banks are begging China for help because why? The LBMA vaults are empty. The COMEX is on fire. I mean, these guys have dug such a hole with the paper by kneecapping the price and selling the stuff short that now people are taking delivery. They want the metal. They don't want the promissory notes. They don't want the lies anymore. That's the good news, right? It's bad news for the banks. And now they got to go hat in hand to China begging for silver.
Perhaps, or perhaps it's that that the price premium is sending, and they need the Chinese to tamp it down a little bit, to use Rostin Benham's famous line. So we don't know what's going on, but it's interesting. They've departed the West's major gold and silver exchanges, and all of a sudden the big Western banks are pouring in there in a very short time frame, seeking to cooperate with the Chinese.
It is a surprising amount of metal they have. On April 23rd, 2024, the Shanghai Futures Exchange Warehouse Vault silver holdings stood at 929 tons. Just a few days later, the same warehouse held only 848 tons. That's a 8.7% decline in the silver available to market from the Shanghai Futures Exchange over 3 days.
It was drawn down about 20% in a few weeks. So today that the Chinese the markets have been closed. We don't have the latest vault holdings because the May Day, the Communist Celebration Day, is a holiday there in China, obviously. But so we'll find out. But it is super interesting to follow this, Sean, and to see the game of turnabout.
Well, let me ask you this before we wrap this up, and we don't have to wrap it up because I still would actually like to talk to you about sub $1,000 palladium. It's kind of an interesting story to watch palladium perform so poorly since it reached its high not that long ago. But I wanted to ask you about why do you think China would cooperate with these the suicide bankers? Why would they be willing to accept pennies on the dollar for an asset that is so clearly worth more than $26 an ounce? Why would they let these suicide bankers take their physical silver for $30 an ounce? It's absurd.
Yeah, well, I suspect China is probably happy to get rid of as much silver as possible because silver is ultimately freedom money. It's what's used for everyday exchange. And I suspect that every ounce that's out of their citizens' hands is okay for China because they don't want the Chinese people to be able to have everyday money in their hands. They still want them on their digital currency system with their digital social credit score. So China may be okay with them taking silver, and you can see that with their policy. It's illegal to export gold from China unless you first bring it into the Chinese free trade zone from outside sources and then ship it out of the free trade zone to wherever it's going. But that's a bit of it doesn't really add Chinese gold. It doesn't add at all Chinese gold to the international supply. So China is hoarding gold and happy to sell silver. And I think that that the Chinese do not want their citizens to have independent choice and their own unit of free exchange any more than the World Economic Forum or any of these other clowns do.
Mm-hmm. Did you want to talk a little bit about palladium? When I mentioned that to you before I hit record, you said any honest unit of measure looks like a bargain at this point. Palladium,
Yeah.
sub $1,000 palladium. I didn't think we'd see that again. It wasn't that long ago. Palladium was what, 2,000-3,000 an ounce.
Yeah, I mean, there's a war on palladium. But there's a war on internal combustion engines, and that's, I think, I know that's where palladium gets the majority of its demand. It's about 85% goes into gasoline catalytic converters. What I do find super interesting, Sean, is copper, because the three historic the three historic metals that were monetary metals were silver, gold, and copper. And silver, gold, and copper have run within a couple of percentage of each other since the Consumer Price Index report came out on February 13th. When that CPI report came out showing that they weren't containing inflation, copper, silver, and gold, which are the three monetary metals, have run together. And I think that's the really, really interesting thing. Palladium is an industrial metal. Yes, like wheat or anything else, it has its uses, its importance, or oil, nickel, doesn't much matter. They're all very valuable commodities. But copper, gold, and silver are monetary metals. They're used as units of exchange, as money. And it is interesting to see them behave so coherently together. I think the run that we're seeing in gold, silver, and copper, even though they are digital assets in the digital exchanges, that this is the onset of the failure of the paper capping system, of the trading of these promissory notes, and that these three metals are starting to break away, or they're having to back off on trying to sell them down to contain their price because of the actual shortage. And we know that there is a global copper shortage that the smelters in China have gone from roughly $100 a ton to $10-15 a ton as a smelter fee to smelt the concentrate that they get. So we're seeing changes here and a definite move into monetary metals. The concern is that there's hundreds of trillions of dollars of paper which is dependent on the global debt bubble, and the global debt bubble is burning down. And these real assets are a few percent of the paper that's on fire. And as people jump out of these fraudulent instruments and into real assets, the Fed essentially went on a 40-year money printing program since the mid 80s. And the problem that they have now is that they've inflated these asset bubbles to the sky, including bonds, which are units of debt. And as these units of debt are now on fire, if people start jumping out of their towers of paper and grabbing real assets, which have intrinsic value, is that all this money printing by the central banks over 40 years can become visible in a very, very short period of time. And you could have inflation. You could have prices of real assets like cocoa and sugar and copper and everything else. It can start to double in a few weeks as the trend accelerates of capital seeking haven from the inflationary collapse of the debasement of the currency by the central banks.
Well, it's interesting too, as we round out the conversation, it's so interesting to think about how hard and how many resources the banks have thrown at the gold and silver market. Really, the silver market I like to talk about specifically, because on some days they will trade more paper than there is silver mined in a year on the entire planet to tamp down the price. So it's interesting because,
and that's only in New York, Sean. That's only in New York. They trade multiple. I mean, there's a whole question about the statistics that the LBMA are putting out, but we'll get into that some other time. But just in New York, they're trading 1 billion ounces a day on the busy days, right?
Right. But the point I wanted to make, though, is just that silver and gold are supposed to be the barometers that tell the people that their currency is hyperinflating away. So that's why they have to tamp down the prices. And they don't want silver at 50 because once it goes to 51, it might as well go to 501. So they have to tamp it down. But the genie's out of the bottle. Everybody knows inflation's a problem. Look at the US debt clock. It's absurd. So what I wanted to ask you as we just round out the conversation is your thoughts on this criminal masquerading as a president, Joe Biden. It's so criminal now that this goon, this puppet of the banks and puppets of Rothschild, I would say Zionism, he wants to impose a 44.6% capital gains tax. And in addition to that, this lunatic, this Marxist wants to impose, he'd love to get away with imposing a 25% unrealized tax gain, meaning on assets you haven't even sold, Uncle Sam wants 25% of the profits.
Right.
It's so disgusting. And guess what? Their goal with all of that would be to raise another 4.2 trillion over 10 years. They're going to print over 4 trillion over the next 2 years alone. It's lunacy, man. So I don't know. Are you just fascinated like I am that they have thrown so many resources into tamping down silver's price? I mean, what's the point at this point, honestly?
Well, I mean, the point is kind of a kind of a controlled demolition and making sure that as few people as possible are able to vote with their feet into an independent system. If you look at the World Economic Forum, I mean, they are the authors of "You'll have nothing, you'll be happy," and this is the same theme from the Bolshevik communists when they ran the communist revolution, was that people would have nothing, the state would have everything, and that would you would reach maximum and pure joy through having all the power in the hands of a few people in the Politburo.
Mm-hmm.
So this is just a replay of the old saw, of the total loss of personal control. And the sense in controlling silver and gold is to make sure that you can impose a CBDC system and a social credit scoring system, and that people won't have another choice.
Mm-hmm.
And so I think that's why it's worthwhile to tamp and control and rig everything. You've got to listen to them when they talk, and what they say is you'll have nothing, you'll be happy. So that must be their plan.
Mm.
So yeah, they do not want people with independent lifeboats.
Well, the reason I wanted to keep this up on screen here is I just wanted your thoughts. I think it's a little silly at this point and I like goldsilver.com, Mike Maloney. But I just really, if you're not going, and I know he does, he talks about the manipulation via the paper markets, but chart like this, a forecast like this to me is entirely 100% meaningless because
Totally.
these aren't the real prices of gold. If gold were allowed to really find its harmony, economically speaking, it would already be 5,000 an ounce.
Yeah.
We shouldn't have to wait till 2035 for that. And so the
No.
money printing will continue. Can you imagine if the United States is still a going concern as it currently sits with the dollar? If the dollar is still a going concern that hasn't been fully abandoned by 2035, can you imagine it only being a $5,400 gold price? It's just so absurd, which brings me back to Peter Schiff and his unwillingness to talk about the manipulation. Gold gets hit $50 in a day. He calls it profit taking. It's absurd.
Mm-hmm.
I think he has a fiduciary responsibility to his followers to explain to them that the assets are manipulated and they are at risk because of the suicidal bankers' manipulation via paper markets. And he doesn't do that.
Yeah. So I mean, trying to predict a price for decades of a fraudulent pricing system is quite silly. And we know frauds that they follow the model, the analog model of criticality theory, where they fail, and when they fail, they always fail, first of all, and secondly, when they do fail, they fail catastrophically.
Mm-hmm.
So to have a price prediction here for a decade of a fraudulent system, which is heading south, is showing signs of incipient failure. It's silly. What's going to happen in my view here is that we're going to see a new pricing system arise out of this. It's going to be driven by the global demand for physical gold and silver, and the premia up to $100 premium for gold in Shanghai in the last 6 months, and over $5 for silver. I mean, when you look at the cost of shipping of $1, $2 an ounce, the fact they aren't extinguished, it tells you something in terms of the availability of this metal and the Western digital price for these digital promissory notes. And the only thing to do is get the actual metal, not the promise for the metal, because we've got mountains of promises for metal out there and they're not going to be met.
Yeah, that's right. Who is the fellow that I used to follow? I did a report about $936 silver years and years ago, like 2012, and Alex Jones actually played most of that micro documentary on his show.
Chris
And
Dwayne?
no. It was somebody who really studied the COMEX and the LBMA, and then he passed away. He got cancer. But at that time, he was talking about, I think it was 100 to 1, maybe 130 to 1 paper ounces for every claim, for every physical ounce. And I think it's far, 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 far worse than that.
Adrian Douglas.
That's right. Adrian Douglas. I believe you're right.
Yeah, he actually worked for Halliburton for Dick Cheney's company. He got pancreatic cancer and was gone in a year.
Yeah. It's like the Boeing whistleblowers. Now we have 2 dead Boeing whistleblowers. I mean, it really makes you wonder. You know, he's speaking all this truth about what's really going on in the paper markets for gold and silver manipulation. Then he gets pancreatic cancer and he dies in a year. It makes you wonder, doesn't it?
Yeah, well, it's an interesting coincidence.
Yeah. Well, I appreciate your work. I guess what I'd ask is just for fun. I'm not trying to put you on the spot. What do you think silver is actually worth today if we had a fair and honest market, given the fact that it's so difficult to pull out of the ground? And when they do pull it out of the ground, they find it's more of a 7 or 8 to 1 ratio with gold, not 80 or 90 to 1. What do you think silver should be at today? I mean, is it just as easy as multiplying the current price by 70? Does that get us closer to equilibrium?
Well, I have 2 answers. One is that I think it's the wrong question. I'm not
That's
trying
fine.
to be facetious or cute
No,
or
I know.
anything.
Well, it's a mountain
But
of
I think
paper, and fiat is all worthless. So, I mean, it could be infinity might be the right number.
Well, here's the thing is that with all this hundreds of trillions of dollars of debt that's visibly burning down, and we know we're going to have debt currency or fiat currency crisis in all the major Western countries, is that I think that the people that don't have gold and silver, there's going to come a day where they will not be able to get the things that they want. There will be, and we've seen this in Argentina, for instance,
Mm-hmm.
when they had their crisis in 2002, they had the peso crisis. Food markets opened up in the streets because the stores closed down. They wouldn't take the currency, which had been devalued by 70% overnight. They said, we don't want that garbage. And so food markets opened up in the street because people have to eat. And the unit of exchange was individual links of gold necklaces. And we've seen in Venezuela, there was a currency crisis there in the last few years where you could buy a month's supply of food for 1 ounce of silver.
Mm-hmm.
So I think, Sean, that it's essential for people to have these lifeboats because they're going to be needed to get strategic and important assets in a difficult time.
Right.
Now, if we want to use a historic benchmark of what silver bought, silver historically, like if you look at a silver shekel, and that's not an Israeli or a Jewish unit of exchange, it was used in the Mediterranean basin for centuries. And a shekel, I believe, was about 11 grams for a shekel. And that's what a soldier or a skilled laborer could earn for a day. So it's about a third of an ounce of silver. So if you say like a third of an ounce of silver for centuries purchased a day's labor. So if you take whatever you take for a day's average wage for a soldier or a skilled, let's say $150 or $200 or whatever it is. So you'd go 3 times that because it's a third of an ounce. A shekel is a third of an ounce. So basically 3 times a day's unit of labor in a steady state. But the problem that we have right now is that we're going to go into a blow-off phase where this stuff revalues and it'll be multiples the steady state value. So who knows? I don't know what the price is going to be, but I just think don't try and guess what it is. It's just a return of silver and gold to a monetary form acknowledged by humanity and the markets.
Okay.
And it's going to be able to get you the things that are essential for you to continue your life of yourself and your family.
Okay. I think that's a fair answer. And your reaction to the question is a sound reaction because they're printing our currency into oblivion. And
Yeah.
once the world realizes that, we're going to look like Zimbabwe or Argentina, and the purchasing power of the existing units of currency aren't going to buy jack diddly. And so it's
Yeah.
hard to put a price on it. I was really sort of driving at the fact, though, that today the dollar is still accepted as a unit of exchange, and we haven't officially hit hyperinflation. So in today's value, it could be $500, $700, $1,000 an ounce silver to really provide market equilibrium in a fair and honest market. But we know all markets are fixed. And I don't think there's a
Yeah.
market on planet Earth more fixed than silver and $26 silver in the year
Yep.
2024 with 34 trillion. I wonder how much debt, what was the national debt in 1987 at the previous all-time high when silver hit 50? We should go back and look at that.
As a function of GDP, it was, I think, 125 or 150%. And you're now at 340. But see, that's just the federal debt, right? 34 trillion. But the total debt in the system in the US, when you look at corporate, consumer, state, municipal, everything, all the debt that's there, it's 98 trillion.
Mm-hmm.
So, and Canada is in far worse condition than the States is in terms of the amount of debt that is in the system. So, but, Sean, when in terms of, printing currency to oblivion, and what do you think that they're trying to do? The Cloward Piven strategy, right? The CLOWARD-Piven, PIVEN.
Mm-hmm.
Cloward Piven strategy is to create chaos and impoverish everybody and then impose a new system. So the spending, the shipment of money offshore for these insane wars in Ukraine and in Israel and everywhere else, and the bringing in floods of untrained and uneducated people into the country at a time where you're having AI and automation coming into play. All of this stuff is all heading in the same direction, which is financial and social chaos. And if you read about the Cloward Piven strategy, and there's lots written online, and two university professors that identified the strategy, which was to bring down the country by overloading the government and overloading society, that makes total sense. And the antidote for that is private money and being able to vote with your feet when things go sideways.
Yep. I'm really amused at this illustration that I've had on the screen here because it is really kind of spot on. They manipulate the prices so bad that the plebs don't care about silver. We've been talking about silver on this channel since 2010, maybe 2009. Like I said, Alex Jones even played some of my silver micro documentaries on his show. And that was a real thrill for me that he was being supportive like that to somebody he's never even met. But this illustration is very telling because if the price of silver was rising every day as it should be, it would attract the attention of CNBC and the pleb and the people
and investors.
And they would rush into it. So this is funny. Free.
It would expose the banks, what they've done. It would expose the rig. It would collapse the bullion banks who are really, really short of this stuff. It would give individuals independent voice. There's so many negatives to it that the whole game continues. And that the cartoon you're showing reminds me of Mark Dice trying to give people 100 ounces of a bar of silver
or a Hershey bar
or a bar of chocolate, and they choose so they choose a bar of chocolate that's worth a couple bucks versus, I can't remember what, 500 or $1,000 worth of silver. It's just crazy.
Yeah. He'd done that with a gold coin too. A gold coin or this, 5 Hershey bars.
Who needs it, right?
It's really funny. It's sad to be honest with you though, but I think this has been a bit of a master's class in precious metals and the manipulation of those metals. So I really do appreciate your work. How can people support you? I guess right over here, Jensen's Economic Precious Metals and Markets newsletter. That's jensendavid.substack.com. I will leave a link below. That's the best way to keep up with you, huh?
Yep. I post a couple times a week in there, and I hope to see your listeners there and carry on the conversation there in the comments, and just watch this, this smoldering mess, see what see if it breaks out into open flames. But there sure is an indication of interesting things going on.
Yeah, this smoldering shell of a republic. By the way, guys, the Congress critters, they basically just banned the New Testament. So I guess now we know who really controls us. Dare not speak above your breath when speaking in condemnation of it. I believe that was how Woodrow Wilson felt about these suicidal bankers back in the day. But at least now people are waking up to the control mechanisms and to the actual people who control this system of injustice globally. And as Klaus Schwab has said, you'll own nothing and you'll be happy if we allow them to get away with it. And if you, dear listener, comply.
Yeah. I wouldn't take them too seriously. They're really silly, Sean, in the things that they're doing. And I think all we can do is just shake our heads and continue on the right path.
I agree. No, I absolutely agree. They have really, really revealed themselves in a coming out party since COVID, especially, to be the absolute anti-human tyrants that we thought they were. And now they're not hiding it. People like John Kerry, the Skull and Bonesman, and his disgusting daughter, who has a chair position over at the World Economic Forum. These people don't want you owning gasoline-powered cars. They don't want you in a single-family home. They don't even want you to be able to farm or purchase your food from a farmer. These people are so morally bankrupt, I have to conclude they're Satanists. Personally, that's my conclusion, David.
Yeah, well, we answer to a higher order.
All right. God bless you, man. I always enjoy our conversations. Thank you.
You too, Sean. Thank you.
All right, guys, the link is below, jensendavid.substack.com. And until next time, I want to thank each and every one of you for tuning in. I'll remind you every single day for free, check us out for the real news, the antidote to corporate propaganda over at sgtreport.com. Until next time, friends, God bless you and yours. Bye-bye.
We have treason occurring at every single level. I don't hold the position that it's Joe Biden. It's your House, it's your Senate, it's your Congress, it's all of these maggots. How many of these people voted for the $95 billion fund to go to those three countries, right? All fomenting war. This is what it's all about, and filtering and money laundering on a massive scale. Everyone that voted yes on that should be rounded up by the American people and brought into a court outside of the bar, and they should be held for treason.